Japan, for years, has been a frontrunner in technological advancement. From the automotive sector to electronics, Japan's contribution to modern technology is undeniable. However, there's a hitch. Japan's population is aging rapidly, and the country is feeling the pinch of a shrinking workforce. According to estimates, around 28% of Japan's population is over 65, and this has long-term implications for its economy. India, on the other hand, presents an entirely different scenario. It's a country teeming with young people. According to a UN report, by 2020, the average age in India was just 28, making it one of the youngest countries in the world. And we're talking about a country with over 1 billion people, so that's a massive youth population ready to enter the workforce. Additionally, India has been working hard to position itself as an attractive destination for foreign investments. Policies are being reformed, and there's a focused effort to improve ease of doing business in the country. For example, the Indian government has launched initiatives like Make in India to promote manufacturing and attract foreign direct investment. The match seems almost too perfect, doesn't it? Japan needs a young, vibrant workforce and a broader market to sustain its industries. India needs the technological expertise and the capital to develop its infrastructure and various sectors. So when you see headlines of big Japanese corporations buying stakes in Indian companies, it's not just about money exchanging hands. It's about two nations filling in each other's gaps, creating a symbiosis that could redefine the economic landscape of Asia. Now that we've established the overarching reasons for this burgeoning partnership between Japan and India, let's dive deeper into the specific sectors and companies that are becoming focal points of these investments. One area that's been a hotbed of activity is the tech sector. For instance, Japanese company TechnoPro recently acquired Indian app development studio Robosoft for $108 million. Why? Because TechnoPro recognizes the prowess India has in software development. The country has a pool of skilled developers that can provide high-quality services at competitive rates. Robosoft is a case in point. The company has an impressive portfolio and a talent pool that is hard to ignore. So for TechnoPro, it's not just about getting a stake in the company. It's about tapping into a talent reservoir that India offers. Finance is another sector where Japan is putting its money. Sumitomo Mitsui Financial Group, also known as SMFG, bought a 74.9% stake in Fullerton, India for $2 billion. Now, Fullerton India is a company that has a deep understanding of the Indian market. They offer various financial services that are tailor-made for the Indian consumer. For SMFG, this deal opens doors to a massive market that's still relatively untapped when it comes to financial services. It's a win-win situation. SMFG brings in the capital and expertise, while Fullerton offers the local know-how and customer base. And let's not forget the startups. As of May 2021, Japan had invested over $9.2 billion in Indian startups. These are young companies looking for guidance and financial backing to scale. Japan, with its deep pockets and industrial wisdom, is more than willing to provide that support. Companies like SoftBank have been particularly active, investing in multiple Indian startups across various sectors. SoftBank, of course, should never be underestimated when it comes to full-on or percentage acquisitions of Indian companies. SoftBank has or may still own stakes in companies such as Paytm, Zomato, Flipkart, PB Fintech, and so much more. Collectively, it is known that SoftBank has invested billions of dollars into Indian companies. Moreover, Japan is keenly investing in real estate and infrastructure development projects in India. For example, Marubeni Corporation announced its entry into the Indian real estate market. They aren't just coming in to make a quick buck. They are here for the long haul, looking at sustainable development projects that can contribute to India's growth story. And finally, there are many other significant acquisitions out there. To quickly summarize what these are, Mitsui has acquired a 49% stake in ReNew's RTC project, which is India's first round-the-clock renewable energy project. NTT Data has also acquired a majority stake in Atom Technologies, which is a payment fintech firm that processes billions worth of dollars in transactions. These are not isolated instances or impulsive business decisions. These are calculated moves aimed at mutual growth. And the collaboration extends far beyond the exchange of currency. It's about the exchange of values, expertise, and long-term visions. And as these partnerships mature, the impact will resonate across multiple levels of both economies. Now, we've talked about the investments and the sectors, but what does all this mean for the average person? What kind of ripple effects can we expect from this influx of Japanese investments in India? Firstly, let's talk jobs. Investment usually translates to more employment opportunities, and that's something India, with its large and young workforce, can certainly benefit from. Take the acquisition of Robosoft by Technopro, for instance. Such partnerships often lead to expansion plans, which in turn create more job openings. Given India's prowess in technology and software development, this is an area where the country can expect to see significant job growth. Secondly, these investments could also mean better products and services. For example, the stake that Sumitomo Mitsui Financial Group took in Fullerton, India, can bring with it a slew of financial products designed with the Japanese knack for efficiency and reliability. Imagine having access to financial services that are not only tailor-made for the Indian market, but also have a touch of Japanese precision. That could redefine how financial services operate in India. Moreover, the impact goes beyond the immediate beneficiaries of these investments. Consider the startup ecosystem. Japanese investments have been crucial in boosting Indian startups, not only with funds, but also with mentorship and opening up access to global networks. Companies like SoftBank have been instrumental in this aspect. As these startups succeed and grow, they contribute to the larger economy, create more jobs, and may even go on to become giants in their own right. But it's not just about economics, there's a cultural exchange taking place as well. The increased business collaboration between Japan and India has led to a surge in people-to-people contacts. Language and culture courses are becoming popular, creating a sense of mutual respect and understanding that goes beyond trade deals. In fact, an appreciation for Japanese management techniques such as Kaizen for continuous improvement is growing in India, influencing how businesses operate. And finally, these investments are laying the foundation for strong diplomatic relations between the two nations. Economic partnerships often serve as the bedrock for strategic alliances. The positive relationship in the business realm could spill over into diplomatic arenas, enhancing cooperation in sectors like defense, healthcare, and education. With geopolitical tensions escalating in various parts of the world, such strong alliances are not just beneficial, they are essential for stability. But while the investments from Japan promise a host of benefits, it's essential to be aware of the challenges and criticisms that come along with them. A key issue is the risk of economic dependency. As Japanese companies continue to acquire significant stakes in Indian businesses, questions about autonomy and control arise. For instance, when Mitsubishi UFJ Financial Group injects significant stakes into Indian firms, there could be concerns about the level of influence it may have over strategic decisions. This becomes more problematic when the sectors involved are crucial for national development, like finance and technology. Additionally, there is a risk of market saturation. Japanese investments in Indian startups have been so prevalent that some experts worry it could lead to inflated valuations, making it difficult for local investors to participate. Furthermore, market saturation may also reduce the chances of homegrown companies becoming market leaders in their own right, stifling innovation and long-term growth. The inflow of Japanese investments also poses an environmental question. Projects, especially in real estate and manufacturing, have to be scrutinized for their environmental impact. For example, Marubeni's foray into Indian real estate could raise questions about sustainable construction practices and land use. Japan's record in clean technology could be a boon, but the onus is still on both countries to ensure that rapid development doesn't come at the cost of environmental degradation. Ethical considerations are another area that needs attention. Labor rights, for instance, are a crucial concern. As more Japanese companies set up operations in India, it's important to ensure that labor laws are not bypassed for the sake of efficiency or cost-cutting. Both countries have different labor cultures, and reconciling those effectively is essential to prevent exploitation. However, the most critical voice of concern is often from local businesses that feel overshadowed by their larger, better-funded Japanese competitors. The sentiment could be one of disenfranchisement, as local companies may find it challenging to compete with Japanese firms that have deeper pockets and more advanced technologies at their disposal. It is therefore crucial for regulatory bodies to ensure a level playing field, balancing the need for foreign investment with the necessity to protect local industries. In conclusion, the future is full of opportunities, but it comes with its set of challenges that require careful planning, diversified focus, and transparent governance. As long as both nations are willing to address these issues head-on, there's every reason to believe that the economic relationship between Japan and India will not only grow, but also thrive in the years to come. But anyway, do let us know what you think. Thanks for watching.